It does appear that Omicron spreads very rapidly and can be spread between people who are double vaccinated.
There is no scientific justification whatsoever for keeping these restrictions in place.
It will take a few weeks for us to understand what impact this variant has.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The WHO urges caution as more Omicron cases spring up around the world. Countries tighten travel restrictions. Investors recalibrate risks from the new strain while oil stocks and yields climb, but the moves are modest compared to Friday's sell-off. And stay with Bloomberg Surveillance Early Edition this hour. We also speak to leading economist Jim O'Neill and to British Fashion Council Chief Executive Caroline Rush. Now you can send in your questions on IB Plus TV Go. Now, first thing is first, let's check on the markets. We did see a little bit of repositioning, certainly after that huge sell-off that we saw on Friday. Stocks in Europe and also U.S. equity futures actually rebounding with treasury yields. And we see a semblance of calm returning to global markets while investors reconsider some of their worst-case scenarios for the Omicron coronavirus strain. Now, investors really trying to figure out if the Omicron flare-up ends up being a relative brief scare that markets rebound from, or whether it's a bigger blow to global economic recovery. That just means a waiting game as we find out from virologists, we hope in the next couple of days and weeks, what we're faced with. Now, much remains unanswered about the new strain. We know that 2 South African health scientists suggested it's presenting with mild symptoms so far. The picture overall on Europe seems very similar, actually, between the FTSE, the CAC, and the DAX, down some 0.3%. So, 0.6%. So 0.7% lower, actually, for the FTSE 100. So travel bans being imposed on Southern African nations as governments try to slow the spread of the new Omicron variant in order to buy scientists more time to learn more about the latest mutation of COVID-19. Now, here's how some of the world leaders have been reacting.
I've decided that we're going to be cautious, make sure there's no travel to and from South Africa and 6 other countries in that region.
There is no scientific justification whatsoever for keeping these restrictions in place.
I'm aware that the restrictions are stricter compared to other countries, but we must be as cautious as possible about an unknown risk.
It does appear that Omicron spreads very rapidly and can be spread between people who are double vaccinated. There is also a very extensive mutation.
The new variant is concerned. It moved from being a variant of investigation to a variant of concern within the space of 24 hours.
We are in a strong position, but the objective of what we're doing tonight is to keep that position strong.
We call upon these countries that have imposed travel bans on our country and our other Southern African sister countries to immediately and urgently reverse their decisions.
Now to talk more about the markets and, of course, this new variant is Scott Thiel. He's Chief Fixed Income Strategist at BlackRock. We're also joined by Sam Fazeli from Bloomberg Intelligence. Scott, thank you for joining us. First of all, the sell-off on Friday was really sharp and really ugly. Part of it is, of course, the kind of liquidity that we saw, or volumes, because it was the day after Thanksgiving. But is there anything that actually makes you buy the dip, or is there anything that you thought was unusual on Friday?
Well, I'd make a couple of observations. The first is that it was clearly a restart off trade, right? So we saw sectors that had performed well in the restart give back or lead the downward movement. We saw yield sharply reverse, stocks lower. But I also think the second observation I would make is that there was some interesting movers that we wouldn't necessarily associate with that type of kind of restart off trade, if you will. So, for example, the euro much stronger on the day with the pound more or less unchanged against the dollar. It also gives you insight, Francine, into I think where crowded positioning is. And I know you were talking about Bitcoin, for example, earlier in the program. That there may be times when the market is in such panic that investors are forced out of positions that they have. So I think it's an interesting way of looking at kind of what crowded positions are. And then the final observation I would say is that markets have corrected back. I think part of it obviously is given the uncertainty of the situation, the return of liquidity on a Monday morning. But I think it's more about investors are becoming a little bit more thoughtful about what's going on and understand that there will be some time, right, before we know more information.
Yeah. Yeah, and on that more information, so Moderna, Sam Fazeli, is actually rising some 9.9%, saying that an Omicron vaccine may be ready early 2022. Are we certain at this point that we'll need new vaccines or new boosters to actually, battle Omicron?
Good morning, Francine. No, we're not certain. It does need the work to be done. It is very possible that the antibodies that the current vaccines generate are not as good as neutralizing the Omicron variant. But it's also possible that vaccines that have been in development already at AstraZeneca, BioNTech, Pfizer, and Moderna, designed against the beta variant, have better efficacy. And then we'll have to wait and see how that shapes up. And maybe a third dose also takes your antibodies so high that you can still fight off Omicron, at least for a period of time.
So, Sam, and then I want to go back to the markets with Scott. Sam, what are we certain about at the moment? That there's a lot of mutations, but we don't know whether it's more deadly and we don't know whether it's more transmissible, or is it a given that it transmits quickly, more quick than what we have at the moment?
Well, Francine, it's got characteristics that are similar to the Delta variant in terms of some of the mutations. So it is possible that it's at least as transmissible as the Delta variant, possibly more. And in terms of the deadliness, etc., we really have to wait and not hang too much on anecdotal information from, for instance, South Africa, which is what's making people feel a little bit better today. I am hopeful. I would love it to be the case, but I'm not sure that we really have any information to base views on as to whether this is a mild or more severe or less severe, etc. Variant.
So, Scott, now that we're away from the panic of Friday, what do we know this could have an impact on inflation with? Again, we don't have much news, but if you game it out for us, what does it do to inflation 2-3 months down the line?
Yeah, I mean, I think there's two ways to think about what is the impact on growth, what's the impact on policy, and what's the impact on inflation. Let's take each one of those. I think they're important. The first is obviously depending very much on the efficacy of vaccines and how the medical and the human impact of what's happening. And we'll know that obviously as the days unfold. If it's not as severe as was first feared on Friday, it really delays the restart more than stops it, right, Francine? And so that's an important factor, which is perhaps why the markets are becoming a little bit more sanguine about the panic on Friday. Second is that obviously with respect to inflation, obviously we saw a big drop in oil prices. Again, the restart trade, in my mind, being unwound or at least being taken back and then the panic. But listen, I think it's important to remember, right, in our view, and I think in most market participants' views, the Fed's inflation target has been met, right? It's about the employment situation, which we'll obviously get more information about on Friday. So I think it's, for us, it's not necessarily about about when liftoff starts, but it's about the quantum and about the pathway going forward. And again, I think it's very hard now to read, given the information set that we have, as to how that will impact inflation and policy. But I would say that, again, in our mind, the inflation target has been met.
Sam, so last Thursday, everyone was celebrating Thanksgiving. We seemed like everything was getting better. We were going to have a good Christmas. And suddenly, Omicron hits. We find out about it. And we realize that already it's spread. How much do we know about what it's like, actually, Omicron in the US, in Europe, and the UK? Could it be much more widespread than we think?
Yeah, I mean, Francine, really only genomic analysis will show that. It is possible that it's more widespread, but countries that do a lot of PCR sequencing, such as the UK, would have noticed that, because in certain PCRs, you get a slightly weird response, which was the case also with Alpha, if you remember. That's how it came to be identified so quickly. So I think we would have known, at least in the UK, if it was a lot more widespread. But is it 5 cases, 2 cases, 3 cases, or 20 cases? That's the part that's difficult to know. But I don't expect it to be really widespread yet.
All right. Thank you both for joining us. Sam Fazeli there from Bloomberg Intelligence and Scott Thiel from BlackRock stays with us, and we'll have plenty more, of course, On the markets, a little bit later on today, also the Pfizer chief executive, Albert Bourla. Don't miss that conversation on Bloomberg Balance of Power. That's at 5:30 p.m. London time. We're also looking at the World Health Organization. We heard from a number of good scientists trying to explain exactly what they're looking at. We'll have plenty more from the WHO, and smart conversations continue on Bloomberg Surveillance Early Edition. A little bit later on, we'll also talk to the British Fashion Council Chief Executive Caroline Rush, and then Jim O'Neill, Lord O'Neill, on the 20th anniversary of BRICS. Up next, we continue our conversation with BlackRock's Scott Thiel. Send in your questions on IB Plus TV Go. This is Bloomberg.
I think it's time for change in policy at the Fed. And I was of the view that this may be easier with someone who hasn't repeated over and over again that inflation is transitory, don't worry about it, it's going away. Inflation is not transitory. And it's really important for the Fed to realize this.
Bloomberg opinion columnist and Allianz chief economic advisor Mohamed El-Erian, they're urging the Fed to acknowledge that inflation is not transitory. Scott Thiel from BlackRock is still with us. Scott, of course, when you look at the variant, it's unclear whether, if we have more lockdowns or if this further changes supply chains, how much more inflationary this could be.
Yeah, no, and I think that's right. I mean, I think the key here is going to be we talk about the vaccine-led restart, right? It's the effectiveness of vaccines, not only the ones that are currently out there, but also the ability for the drug companies to then produce something which we think, again, from the knowledge that we get, is something like 100 days from now to in people's arms, if that's required. That's a very important component to the restart, Francine. And so that's the mystery here for us is, will the vaccines be effective, or is this variant something outside of that? Obviously, if it's outside of that, that changes the view. But I would say, again, as we talked about beginning of the segment here, in our mind, the inflation target has been met. And so it's really, in some respects, for the Fed anyway, about the employment situation. Obviously, the Omicron situation is important immediately, but longer term, it's about the employment situation in many respects.
Scott, so do the data points coming out of the U.S., do they matter less because of the variant that could scupper everything, or are you still quite interested to give us an idea of what the Fed is thinking, at least, on data out this week?
Yeah, no, I mean, I think we're gonna stay with our central thesis, which is that again, hoping that the variant does not have a huge health impact, and then that will lead again to what we believe will be a liftoff. QE coming to an end at some point in the middle of 2022, with liftoff around the middle of 2022. Probability of that change from about 70% for a liftoff in May to about 40%. But again, I think it's a little hard to read that with the illiquidity and volatile markets on Friday. But we'll stick with the central thesis for now. Obviously, all of the information that we get, particularly related to the labor market, will be important. We get the non-farm payroll number this Friday.
Yeah. How problematic is Omicron for a lot of the emerging markets that you thought were starting to maybe, had a head start in normalizing policy?
Yeah, I mean, I think it's, the emerging market central banks have very much reacted to the inflationary profile that they've been faced with, right? We've seen rate hikes across the sector, and we've seen expectations of further rate hikes being priced into the market, and currencies cheapen. And that's part of the reason why we like emerging markets, is for both a higher yield and the valuation of currency seems to be attractive for investors on a medium term. I would look at South Africa, for example, as an interesting case here, given the situation down there. The rand is 2% cheaper, really, since we got the Omicron news, but back from about 3.5–4% cheaper at its lowest point. If we look at it, though, it has been cheapening as a result of kind of the concerns around emerging markets and around policy, et cetera. So what I would say is that, again, I don't see the impact has come back quite a bit from Omicron, Fran, and I think we're going to remain with our central thesis around staying invested as we go through this period. Again, obviously, if the vaccine information changes, that would change our view.
Yeah. Does it change supply chains that have already changed further, or does it just make a marginal difference?
Well, I mean, it's tricky to say, right? I mean, obviously, if it's a lasting impact and it changes, it leads to further restrictions, I think that would be significant. But what I would say on the restrictions, right, is what we've seen is interesting is, listen, the UK government is a good example. They reacted very quickly, right? They've reacted very quickly to the new variant. They've imposed restrictions they've added mask wearing and on the tube, et cetera. They've restricted travel. And so I take some comfort in this kind of the quicker response, which in some respects hopefully will be, make the response less stringent and also more effective. And so I think we have to watch the confluence of these factors as we go through time.
Scott, thank you so much. Scott Thiel, their chief fixed income strategist at BlackRock, joining us this morning. Now, we'll have plenty more, of course, on the markets, and we'll have plenty more on Omicron throughout the day. Let's also get to the Bloomberg First Word News. And here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The World Health Organization is working with researchers to better understand the new coronavirus variant after health experts in South Africa said it appeared to cause only mild symptoms. The WHO says there's no information yet to suggest Omicron symptoms differ from those caused by other variants. Now, early data suggests American shoppers returned to stores on Black Friday this year, but traffic remained well below pre-pandemic levels. According to Sensormatic Solutions, visits to stores and shopping centres trailed 2019 levels by 28%, but were up almost 50% on last year. Adobe estimates online purchases totaled $8.9 billion at the low end of expectations and slightly less than last year. Now, LVMH's star designer Virgil Abloh has died after battling cancer for several years. Abloh came to prominence as Kanye West's creative director, but later made history as the first African-American to lead Louis Vuitton. He was a key figure in the brand's push to attract more millennials. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, oil rebounds from Friday's rout as traders assess the risks to global demand from the new virus variant. That story is up next. We'll have a full roundup, of course, of market news as well. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there is quite a lot going on in the markets. Oil also rebounding from Friday's rout as traders assess the risks to global demand from the new virus variation. Well, speculation is also mounting that OPEC Plus may actually decide to pause output increases when they meet this week. Let's get straight to Bloomberg's Julian Lee, who joins us now with the very latest on oil. Julian, first of all, good morning. Oil prices recovering about 40% of Friday's slump. So where do they go from here?
I think over the next few days, they're probably going to remain pretty volatile. And I think there's a number of things that are going to be driving that. One is obviously how health authorities around the world assess this new strain of the coronavirus, whether this is seen to be as dangerous and as transmissible as the Delta variant, or whether it turns out to be, in some senses, more benign. I think all of those deliberations are going to have a huge impact on oil prices over the next few days. And then, of course, traders are also going to be assessing what OPEC will do and their allies in the wider OPEC Plus group, how they will respond both to this new variant and to the announcement earlier last week of a stockpile release led by the United States.
So, Julian, how are the OPEC Plus oil producers going to react? And as you say, this is after the strategic oil reserves were actually released, and the government stockpiles. How does this all play out, given that we don't know actually what Omicron is in the future, so we don't know how much demand it will dent?
Yeah, I think the thing that we have to bear in mind is that even before any of this, if we were having this conversation a week or so ago, before the new variant was identified, before President Biden came out and announced this stockpile release and other countries joined him, even then, the OPEC Plus group was forecasting that the first quarter of next year we would see a very large stock build. So they were, I think, already potentially considering a delay to adding more oil in January. The stockpile release, I think, has added weight to that argument that the consuming countries are putting oil into the market, therefore OPEC Plus doesn't need to. And this new variant, I think, has just heightened that view.
Right. Julian, thank you so much. Julian Lee there from Bloomberg Intelligence. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. We look at the markets, we look at oil, and of course, we look at emerging markets. This is Bloomberg. The WHO urges caution as more Omicron cases spring up around the world. Countries tighten travel restrictions. Investors recalibrate risks from the new strain. Oil stocks and yields climb, but the moves are modest compared to Friday's sell-off. And stay with Bloomberg Surveillance Early Edition. This hour, we speak to the British Fashion Council Chief Executive Caroline Rush. Up next, we're also joined by leading economist Jim O'Neill. Send in your questions on IB Plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. The market's a lot more positive compared to what we saw on Friday. I was in the office Friday looking at the bloodbath that was across the board when you looked at a lot of Wall Street, but also European stocks. On Friday, they were down between 3% and 4%. Today, we're seeing a little bit of a pickup, certainly a lot more optimism out there as we try and figure out what Omicron is. The European stock 600 gaining 0.9%. A lot of the questions are now on what it means for central banks, what it means to inflation, but certainly it's a different mood out there with the markets. The turmoil definitely easing, and investors are trying to work out if Omicron flare up ends up being a relatively brief scare that markets rebound from, or a bigger blow to the global economic recovery. Well, to talk about all of this and the BRICS, we're joined by Jim O'Neill, a leading economist known for creating the acronym BRICS. It feels like it was yesterday, but actually it was back in 2001, 20 years ago. Lord O'Neill is also former chair of Goldman Sachs Asset Management, former chair of Chatham House, and a former UK Treasury Minister. So, Jim, as always, thank you so much for coming on. There are many, many questions about what happens with inflation, what happens with emerging markets, what happens, of course, with global growth because of Omicron. How should we look at it right now? There was a big sell-off on Friday. Was it overdone?
No idea, Fran, to be honest. I think, not for the first time, there's twists in this coronavirus pandemic that not even those most expertly trained at the epidemiology even really know what's going on. So for right now, for the markets, we're back to one of those positions where you got to perhaps change your risk rewards thinking a little bit. Because obviously people until Friday had, bizarrely in hindsight, sort of forgotten about the quite inevitability of another mutation. And that seems to be the reality with these things. So we now got to wait and figure out what the evidence shows as to how bad this is. Obviously the talk this morning, particularly coming out of South Africa, is that people that have got it don't appear to have particularly severe illness. So if that appears to be the case, then, within days we'll all be relaxed again. But how this morning I can't really see how anybody could really know. So it's not surprising the markets have bounced a bit, and it's not surprising that they've not bounced as much as they fell on Friday to me. But we'll have to see. I guess the bigger
20th anniversary, Jim.
The bigger issue, yes. On my forehead, still BRICS. There it is.
BRICS. What does this all mean for? I know, but that was, I mean, it's something that we still talk about, that people are still interested about. You know, it has, you know, pretty good longevity.
Yeah.
What does it mean for emerging markets? You know, we're creating a two-speed world where the rich countries have access to vaccine and boosters and the others don't.
Well, I mean, part of the ongoing fascination of the interplay between economics in general and markets is you know, just the true reality. I can say this because I'm not in it every day, but the real uncertainties and the unpredictability. I would suspect, given how the mood started to develop about Fed tightening and central bank tightening, amongst the consequences at the margin of this latest news is that central bankers probably will be a little bit more careful about rushing to press the tightening button, which, given the peculiar relationship between many emerging market asset prices and central bank policies in the West, bizarrely, it might actually help emerging market financial assets because it means there's less threat of higher risk-free rates in the immediate future than otherwise would be the case. But obviously, in the big picture, in terms of the underlying structure of these economies, it clearly does heighten the inequitable distribution of vaccines and the fact that most African countries have had barely any vaccination. It adds to the large number of structural problems many of these places have got. And so you got to, as always, got to sort of set one off against the other, I suppose. Yeah.
Yeah, and if we take stock of what happened in the last 20 years, so China soared, India pretty much climbed, but Brazil and Russia stumbled. You know, with hindsight, is there anything that is structural in those kind of countries that would have made that predictable?
Let me say three quick things about that, Fran. First of all, even though nobody ever remembered it this way, we always tried hard to make it clear that we were sort of scenario gazing and not making specific predictions. Secondly, in that regard, I mean, I personally repeatedly said during the noughties when all four of them were flying that you would not be able to really tell the true, let's call it BRIC status of Brazil and Russia until we'd had a decline in commodity prices, and they didn't survive it very well. So the bottom line is countries in the emerging world that are very well endowed with commodities, life seems to be a struggle in terms of breaking through the so-called middle income trap. Both these countries, even though they've got a huge number of differences, have to somehow undertake reforms that grow the importance of their non-commodity sector. So they stop being this perpetual victim of wild gyrations in commodity prices and what makes them sort of lazy with it too. And then thirdly, very quickly, you know, in hindsight, 20 years later, I think something we developed in parallel, which is, we called it a growth environment score that measured the speed of the convergence gap on productivity. And if I would have been able to do that now, knowing everything I know from 20 years, you know, I would have given greater risk assessment to the speed actually getting, rather than just assuming there would be catch up, it would be dependent on certain things being improved. And in Brazil and Russia, neither has happened.
Jim, I know you've also spent quite a lot of time looking at how we can decarbonize our economies sustainably without losing economic prowess. Who's doing it right? Are we going too fast? Like, if you look at the transition, some say, look, the transition will last too long, so we're doing damage to the world. And others saying, well, we could be in for another shock, you know, very similar to what we saw with energy because we're going so fast.
Well, the bit I'm focused on is pretty topical to what you just mentioned about the strategic oil reserve. You know, as I often joke about, way before BRICS and indeed before I even got into the world of finance, I wasted 3 years of my life doing a PhD during the second oil price crisis. And the one thing it taught me is nobody has the slightest, it makes forecasting currencies seem easy trying to forecast oil prices. But I did learn a lot. And what is clear to me is that if we reduce the amount of marginal fossil fuels, and especially because of some of the alternatives being so weather dependent, particularly wind and sun, we will have these intermittent huge price spikes when there's a demand surge and a supply shortage in alternatives. So we have to have an even more imaginative approach from our policymakers, including what I specifically called for in a piece of Project Syndicate 4 weeks back, is for them to agree to unleash oil reserves to stop these huge oil price spikes, because otherwise, especially given all the inequality issues out there, our people are not going to support these things that might improve our lives in another 30 years' time, or particularly for our kids, because it's going to make their current lives so much worse. And so I really applaud this strategic oil reserve move, even though it was quite small amounts. But that's the sort of thing they've got to consider having in place as a permanent agreement, because otherwise the appetite to fight climate change will fail.
Jim, thank you so much, as always, for your time. Lord Jim O'Neill there joining us this morning. We'll have plenty more, of course, on what Jim was talking about throughout the next hours and days. Now, coming up, we'll talk about the future of fashion also and the challenges to the sector. Joining us, Kailey Leinz, Chief Executive of the British Fashion Council, as they also prepare for the Fashion Awards. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the clothing industry is back in the spotlight this week with the Fashion Awards by TikTok making a comeback today. Working from home has changed the fashion landscape through the pandemic, but there's a darker side to the industry, with clothing manufacturers accounting for nearly 5% of global greenhouse gas emissions. So where's the industry headed? Well, Kailey Leinz is the Chief Executive of the British Fashion Council, which of course helps organises the awards tonight. She was first appointed as Joint Chief Executive of the non-profit in 2009 and then took over as sole Chief Executive in 2012. Now, she's been credited with playing a crucial role in attracting brands such as Burberry and Pringle back to London and for raising the profile of the London Fashion Week. So Kailey Leinz, as always, thank you so much for giving us a little bit of your time. When you look at the difficulties that actually the luxury and the fashion world has had during the pandemic, we just seem to be getting out of it, and things were getting better within fashion shows, and now we have a strain. Is the fashion industry as a whole a lot more resilient than it was 2 years ago?
I think the fashion industry's had a very challenging couple of years, but we've started to see with results that some of the businesses are, adapted, are starting to recover. But of course, is there any news of a strain and the idea that we might go back into potential lockdowns? We're seeing that obviously further restrictions in mainland Europe just causes an element of concern. But I do think that businesses obviously have really focused over the last 2 years thinking about their resilience and how they can adapt to living with COVID and coping with it sort of for many years to come, really.
Kailey, I don't know whether we still talk about Brexit as a concern of actually some of the hurdles there have been passed, and whether the supply chains have really adapted to the luxury and fashion world in the last two years.
Brexit has been a significant challenge for the fashion industry, I think particularly for British businesses. The rules of origin around clothing doesn't really fit the free trade agreement with Europe. And so there's a lot of details still going through. And of course is mindful that as our governments start to negotiate new trade agreements around the rest of the globe, that the fashion industry is considered. We contribute 35 billion to the British economy, employed 890,000 people pre the pandemic, awaiting for new figures, obviously. But there continues to be many challenges. As we said at the top, is that businesses are starting to recover as tourism starting to come back. There has been a pent-up demand, and that's quite a few businesses are starting to see that come through. But of course, is that we want to make sure that we're able to trade on an even keel with our counterparts within the EU, and to make sure that businesses are able to thrive headquartered within the UK. We have seen businesses move things like manufacturing, warehousing to Central Europe just to overcome some of these problems. And of course, that's very disappointing because it means jobs going from the UK to mainland Europe.
Caroline, the Fashion Awards presented by TikTok is a name shift that also represents, I guess, the impact and the importance of social media for fashion. Does that just accelerate with time, or does it stabilize?
Well, I think is that we continue to see new platforms coming through, and TikTok has been a fantastic partner during London Fashion Week. They supported young designers. The engagement of the platform has far exceeded other platforms that we engage with, and the speed in which people respond to it. So we're really looking forward to partnering with TikTok this evening. For us, it's a way of talking about new technologies, the reach of new audiences that you can get, of course, through partnering and through engaging with different platforms, is that the fashion industry has significantly changed through the use of technology. Of course, the birth of e-commerce back in the millennium, all the way through to how businesses are adapting and selling on social media platforms. And of course, thinking about how fashion's engaging in the metaverse. So as we look at all of these platforms and we look at the audiences that they bring and look at new opportunities for business really to flex their business models to engage with audiences and to be able to sell perhaps in a digital way rather than physical products is a really exciting opportunity for the industry as a whole.
Yeah, and how do you see this playing out, Caroline? How does fashion actually play in the metaverse? I mean, we're just at the beginning of what the metaverse could become in 5-6 years.
So we had a report actually in September this year to talk about what the next 10 years are going to look like, what our wardrobes will look like, how much we'll own, how much we'll rent, how much will be digital product. And of course, as we move into that, is that many businesses are exploring that. We have seen quite a few businesses from independent designers, such as Stephen Cook, all the way through to fashion brands such as Gucci and platforms like Farfetch, who, of course, are sort of exploring, experimenting in the metaverse. And that's something that we'll be seeing a little bit of this evening at the Fashion Awards in London.
Is fashion and luxury in general just doing enough to push sustainability forward?
Well, of course, the fashion industry had a much bigger voice at COP26. We were delighted to see the UN Fashion Charter businesses do a further commitment to reduce emissions by 50% by 2030. It had previously been 30%, and of course, to be carbon neutral by 2050. It is a significant challenge, and it is actually one of the areas where businesses come together to really think about sharing knowledge, expertise, and tackle the challenges together. We launched an Institute of Positive Fashion to enable us to do this. It means that we can also use the platforms we have, such as the Fashion Awards and London Fashion Week, to be able to communicate what's happening in the industry to much larger consumer audiences and to really elevate those businesses that are taking a much more responsible stance, whether that's through environmental policies or inclusivity, equity within the fashion industry. And there are fantastic businesses out there that are really tackling these challenges head on and going further than others. And we want to be able to celebrate those. Of course, the fashion industry is known for its creativity, but there are businesses that are and individuals that are absolutely leading change. And we want to make sure that they are recognized for that.
Yeah, and Caroline, I have to say the fashion world, was reeling yesterday with the sudden passing of Virgil Abloh of LVMH and the founder of Off-White. With his passing, what void will there be?
Well, yes, is that the news, of course, is very raw, is that it was quite sudden, is that Virgil had apparently been battling very privately with cancer. And he is going to leave, his passing is going to leave a massive void. He was such an incredible creative. He sort of represents fashion and culture and the blurring of all of those lines. He's been a fantastic mentor. He's given over his platform to so many. He has championed for diversity within the fashion industry. and of course has also delivered some really memorable shows and products. So it's going to be it's difficult, I think, for of course LV, but of course for the fashion industry, where he was very much not only admired and respected, but loved by so many. But of course, at these times, you have to think of his family and his closest friends and the impact of there. And of course, our love and our thoughts and sympathy goes out to all of them.
Caroline, thank you so much for your words. Caroline Rush, there, Chief Executive of the British Fashion Council, of course, with the awards also by TikTok led this evening. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Gazprom's third quarter net income has surged to an all-time high as gas prices reached a fresh record amid Europe's deepening energy crisis. Net income at the world's largest gas producer rose $7.8 billion compared with a net loss a year ago. The company says it will pay 50% of adjusted net income in dividends. Now, Australia's Prime Minister Scott Morrison is proposing new legislation that would force social media firms to reveal the identities of anonymous trolls. Under the laws, people who believe they've been defamed could get a court order forcing companies to disclose who is behind the post. If companies refuse, they'd have to pay a defamation cost. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, airlines respond to a deluge of travel restrictions announced over the weekend to slow the spread of the new Omicron variant. We take a look at travel stocks next. This is Bloomberg. Now, the Omicron variant having a big impact on the travel sector, with airlines roaring back today after taking a beating on Friday. Let's bring in Bloomberg's Ed Ludlow. Ed, what do you have?
Yeah, good morning, Fran. I mean, a lot of green on the screen, right? We're rebounding from the losses we saw on Friday. IAG, the parent of British Airways, of course, up 4%. Lufthansa had been down earlier in the session, but then rebounding itself up 4%. And you see the low-cost airlines, EasyJet, Ryanair, also in the green. But you have to give context, right? This was a serious sell-off we saw Friday. So we bring up the two-day chart on the Stock 600 Travel and Leisure Index. You know, yes, we're rebounding somewhat, but we're nowhere near to clawing back the losses on a two-day basis that we saw from Friday. And there is concern out there. You know, Morgan Stanley writing that volatility will remain in travel stocks in particular. Why? Because they're susceptible to the news. We don't know a lot about this variant. There's more information to come, and we don't fully know the extent. Citigroup also seeing headwinds from further travel restrictions. You think about the UK requiring quarantine until you have a negative test. The US banning travel from those 8 southern countries, and then Japan going as far as banning all travel, all entry by foreign investors. There is a reversal of the trade we saw Friday, though. We do see those stocks selling off in US pre-market, and then some buying, of course, as the airlines that sold Friday. Fran.
Ed, thanks so much. Our Ed Ludlow there with the very latest on the airline stocks. Now, Bloomberg Surveillance Early Edition continues in the next hour. We'll have a full roundup of the markets and of Omicron. This is Bloomberg.
We're in a tricky situation.
It's been a difficult conundrum, hasn't it, for the central banks?
The scenario that we've got a red-hot economy it is somewhat brought into question if this variant is as serious as some people think.
Right now, it's the fear that's driving prices, and I wouldn't necessarily get in the way, right? It's like catching a falling knife.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Monday, November the 29th. Our top stories today. Plenty of questions about Omicron, but not many answers. Global markets face weeks of uncertainty as scientists analyze the threat posed by the newest coronavirus variant. Look for flying to become more expensive and less convenient. Airline stocks are bouncing back, but governments continue to ramp up travel restrictions designed to slow the spread of Omicron, and the woman who's entering a world dominated by male creators. We will talk with the Russian dancer Natalia Osipova about the world's first ballet NFT non-fungible token. Good morning, everybody. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards, live here in London. And Kailey, we saw a lot of fear in markets on Friday. You and I were talking a lot about this for a few hours on Friday morning. The extent of nervousness, markets, or was that robots, reacted, asked questions later. Now we still have a lot of questions.
Yeah, it may have been some robots, Anna. A lot of questions remain, but the market looking decidedly more calm, at least in Europe and the U.S. today. That wasn't necessarily the case in the Asian session overnight. Instead, stocks broadly lower once again. The Nikkei, a big underperformer. Those Japanese equities down about 1.6%. And China and Hong Kong were lower as well. A big group of stocks underperforming within that were actually Macau casino operators after the arrest of the CEO of the world's biggest junket operator raises concern about the regulatory crackdown in that industry in particular. And as a result, you saw the likes of Wynn Macau down the better part of 8% in the overnight session. Now, another big move from Friday was what we saw in the Japanese yen, a huge safe haven bid. It had its best day against the U.S. dollar going all the way back to March of 2020. And in this session today, it's actually really flat against the dollar. The dollar was gaining back a little bit of strength earlier. Right now, we're basically unchanged at 113.36. You are seeing a nice rebound across the commodity complex, though, including for some of those metals. Iron ore futures in Singapore up about 7% in the Asian session. Now, as for the picture here in the U.S., this Monday morning looking a lot better than Friday did. Futures are up about 0.6% on the S&P 500 after the worst day for that index going all the way back to February. In the bond market, we are seeing some reversal. We saw a massive 16-point move to the downside for the U.S. 10-year Treasury yield on Friday. This morning, though, it's up the better part of 6 basis points to 153. A big rebound in oil as well after a 13% decline to end the week last week. WTI is up about 5%. We're sitting at 71.58, and Bitcoin getting a little bit of a rebound after gaining over the weekend. Matt, right now it's trading just shy of $57,000.
All right, Kailey, thanks very much. Now we are looking at stocks here that are on the rebound. Pretty decent rebound, although not compared to the drops that we saw on Friday. I know you and Anna were on air after Thanksgiving talking about this a lot. A lot of nervousness about the spread of the Omicron virus and that reverberating through markets. Now investors are looking to buy the dip. You can see the Stoxx Europe 600 up 0.7%. German bunds are coming down in yield right now, so rising in yield right now, so investors are buying or selling those bonds. You can see Brent crude coming up 4.5%. Of course, huge drops on Friday. Nat gas also coming back. That's on concern about the coldest temperatures that we've seen in a lot of places since the early 80s. Up in Scandinavia, getting down to negative 37 degrees. I can't remember if that's Fahrenheit or Celsius, but at that level, the numbers are about the same, negative 36, negative 37. Louis Vuitton Moet Hennessy is a big gainer today, and I thought that was interesting. It's the second biggest point addition on the Stoxx 600 because what it means is investors are less concerned about lockdowns, less concerned about a slowdown in travel, and that's where, these luxury goods are sold for the most part in airports, in big travel, in tourist centers. And as we get more news that the Omicron virus may be fast spreading, but a mild infection, it looks like investors are calming down a little bit on that front. Anna?
Yeah, how much credence, how much weight do we attach to the anecdotal evidence as it is at the moment around mild infection? We'll certainly get into that conversation. Let's take a look at what lies ahead for us this week. We've got plenty to talk about here, aside from the Omicron virus. Of course, this hangs over everything. The UK government will convene an urgent meeting of G7 health ministers today. That is to discuss the latest developments on the new virus variants. And in the United States, President Joe Biden will also give an update. On Tuesday, Fed Chair Jerome Powell gets an early opportunity to defend his renomination when he appears before the Senate Banking Committee alongside Treasury Secretary Janet Yellen. Powell is also expected to defend his renomination, as mentioned. On Wednesday, Meta shares start trading on the NASDAQ under MVRS. That will be the new ticker, following the Facebook rebrand announced last month. And on Friday, we'll get the US jobs report. Payrolls are expected to rise by 550,000, another strong increase. And OPEC Plus will be meeting as well this week to reevaluate plans for reviving oil supplies. And Matt, you were talking about how oil prices bouncing this morning. They were down 13% on Friday, and that really adding another dimension to that OPEC meeting.
Yeah, I will say I was watching you guys on Friday, and just unbelievable the fear that swept through markets or maybe swept through the algorithms. So now you're going to see obviously a little bit of a bounce back, but we still haven't made up for what we lost on that day. Now, the WHO is working with researchers around the world to better understand the new coronavirus variant. Meanwhile, governments are banning travelers from South Africa and nearby countries. A little late, it seems. Anthony Fauci, the top medical advisor to U.S. President Joe Biden, is urging people to get vaccinated or boosted.
This is a clarion call, as far as I'm concerned, of saying, let's put aside all of these differences that we have and say, if you're not vaccinated, get vaccinated. If you're fully vaccinated, get boosted, and get the children vaccinated also. We now have time.
Of course, the big question is, do these vaccinations even work against this variant? Let's get more with Bloomberg's Maria Tadeo, who's been following the moves. And there are new headlines every few hours, Maria.
Yeah, there's new headlines, Matt, and there's new infections and new variants that are being found in terms of new cases of this new mutation we've had in Germany, Italy, France. We've also had a big hub in the Netherlands with 13 cases already identified of the new mutation. Now, a lot of this, of course, Matt, is bringing up this debate. You mentioned Dr. Fauci, but in Europe is very much the same story. Every government, all of the European institutions saying if you are not vaccinated, you should get your vaccine now. And if you need a booster, you should get it now before the winter. What's clear now is that this mutation is already in continental Europe. The goal now is to prevent it from being widespread. The other thing, Matt, that is very interesting, and you and I have talked about this, is what to do with the IP of the vaccines. There is, again, a big debate as to whether or not they should be removed in order for everyone to be able to access the vaccines. What's clear is that this whole thing of no one is safe until everyone is safe sounds great on paper, but in reality, we've not been able to vaccinate everyone. There's a huge gap between the rich countries and the not so rich countries.
Okay, and in the meantime, government's scrambling to work out how to respond then to these infections of the Omicron variant then, Maria. And we've seen, as you say, it's already on the European continent. We've seen global governments respond, Japan most notably overnight with some really strict measures. What's the European travel curb situation? I say this conscious that this is controversial territory. The WHO's Tedros saying that South Africa and Botswana should be thanked and should not be punished for alerting the world to this new variant.
Yes, and many would argue that, you know, the reason why we find new mutations is because they're being sequenced. So in many ways, this is a good job that South Africa is doing. But in Europe, you have seen almost this knee-jerk reaction, this panic to say we're already worried and concerned about the winter. The numbers that we have already at the table are very worrisome. So anything that comes from the outside, we want to shut it down or not. Whether that is valid or not, this is not really the big concern for Europe. There's almost a sense that it really wants to protect itself from anything that's outside. When it comes to the internal borders in the European Union, the picture is different. As you know, politically, this is very sensitive. And this is something the European governments do not like to do, to shut down the Schengen space. That is a free movement across Europe.
It does seem like they may be closing the gates after the horse is already out of the barn. Maria Tadeo, thanks very much for reporting on this for us. Now, travel restrictions on South Africa and 7 countries nearby should come into effect today in the U.S. Again, it's very likely that the horse is out of the barn. President Biden is going to address the nation on the variant later the day. Of course, Anthony Fauci has said it's likely that there are already Omicron cases in the U.S. Emily Wilkins, Bloomberg government reporter, joins us from D.C. What can the administration do, Emily, and doesn't it seem to be coming a little bit late?
Matt, you make a really good point. And over the weekend, we did hear from some former advisors to President Biden, advisors on the COVID-19 virus, who say that this travel ban, it's not enough, that it's not going to fully prevent the spread of Omicron in the U.S., and that, in fact, putting these bans on these countries is, in a way, punishing them for being able to report out the new variant that we are seeing. And so there is some debate about how well that's going to work. What we are hearing from Dr. Anthony Fauci is that he does think the vaccines are going to prevent people from getting the worst symptoms that could be attached to this virus. But he also said that the importance of these travel bans are just to buy time. We don't know yet exactly how fast Omicron spreads. We don't know exactly yet how protected you are if you do have the vaccine, if you do have the boosters. And so having these travel bans, the idea is just to slow it down a little bit so when we do finally get the research, we can respond appropriately.
Well, Emily, I'm sure Congress would also like to buy some time because they need to avert a government shutdown, deal with the debt ceiling, try and pass the Build Back Better plan all before their next recess for Christmas, which is in just 2 weeks. As the Senate returns to Capitol Hill today, what's their #1 priority?
So a couple different priorities going on here. Number one is to make sure that the government is funded past December 3rd to avoid a government-wide shutdown. We're looking at potentially doing another short-term spending cover that would take us from here until perhaps mid-December, give lawmakers a little bit more time to finalize that budget for the next fiscal year. Also on the horizon is the debt limit. Lawmakers have until mid-December. We've heard December 15th from Janet Yellen as the date to figure out how to raise that. You've sort of seen the standoff between Democrats and Republicans. Republicans saying they will not partner with Democrats on it, but Democrats also so far not really embracing using that reconciliation process that would allow them to raise the debt limit on their own. And don't forget, there is still President Biden's social welfare and tax plan. The House did move that. It's now in the Senate, where we could see weeks, if not longer, of debate before the changes are made. It goes back to the House and then potentially back to President Biden's desk.
Emily, thank you very much. Emily Wilkins of Bloomberg Governments in Washington. Thank you for joining us. Meanwhile, markets are facing weeks of uncertainty as scientists race to assess the risks posed by the Omicron variant. For more on the market response, Eddie van der Walt of Bloomberg Markets Live. Eddie, it's probably an exaggeration to say that the algorithms and the robots were in charge on Friday and now the humans get a chance to get back to their desks. If that's the case, we're not wholeheartedly rebounding from that fear of Friday. A lot of that fear still in the markets, even if we see a little bit of a rebound.
Yeah, absolutely. And I think, I think some of that repricing in some of the markets was warranted, right? I think, yes, we had thin liquidity. Yes, the moves was probably exaggerated. But I think, there was a lot of optimism in markets and people just thinking we're going to get away with, a risk-free Christmas and so on. And I think some of that's just being scaled back.
What about an oil, Eddie? Does the fact that WTI came down 13% yesterday actually accurately reflect a demand outlook that has gotten more cloudy?
Look, I think oil will be the place where this is played out. And I think at this moment in time, yes, there's a lot we don't know about the virus. But I think what we really care about in markets isn't what how severe the virus is. It's how severe the policy response is, whether we send people into lockdown and whether, global travel restrictions are enforced. And if that is the case, then yes, the oil price moves were warranted.
All right, Bloomberg's Eddie van der Walt of Bloomberg M Live, thank you so much. And of course, I was talking about Friday, but really all the days seem to blend together. But let's take a look at what is moving on this Monday morning in pre-market trading here in the U.S. Of course, it all really is about the virus and that variant. Moderna, the COVID-19 vaccine maker, says they could have a new vaccine for the Omicron variant by early 2022. So that is only a few months away. And as a result, that is a big outperformer in pre-market trading. That stock up the better part of 10%. You also are seeing a little bit of a rebound in the travel complex, not necessarily making up for Friday's losses, but still gaining a little bit of ground back. One of them, Carnival Cruise Lines, up about 3.3% before the bell. In the same vein, though, the stay-at-home plays that did really well on Friday are giving some of that back on this Monday morning. Zoom Video is down about 1.5% before the bell, Anna.
Absolutely. We'll certainly look for more evidence of that move. Coming up on this programme, as the world continues to assess the risks of the Omicron variant, we will speak with an Oxford expert in epidemiology. Sunetra Gupta joins us. And it's the world's first NFT for ballet. More from world-famous ballerina Natalia Osipova. That's ahead. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards in London and Matt Miller in Berlin. Now let's get your first word news, and it's the latest sign of tension between the U.S. and Russia. Moscow's ambassador to Washington, Anatoly Antonov, says that more than 50 diplomats and their families will have to leave the U.S. by the middle of next year. That confirms departures that Russia has warned of for months. The U.S. is taking a tougher approach after Russia banned the U.S. from employing its citizens at the embassy in Moscow. In New York, final jury selection and opening arguments are set for today in the trial of Ghislaine Maxwell. The British socialite is accused of grooming underage girls for sex with the late financier Jeffrey Epstein. She faces as many as 40 years in prison. In Spain, inflation has risen to its fastest level in almost 3 decades. Consumer prices rose 5.6% in November on higher food prices. That underscored the lingering consequences of supply chain bottlenecks across Europe. And shoppers returned to stores in the U.S. on Black Friday, but traffic remained well below pre-pandemic levels. According to Sensormatic Solutions, visits to stores and shopping centers rose 48% from a year ago. Still, it was down 28% from 2019. And I wonder, Anna, if more people will be taking advantage of Cyber Monday because of fear around the Omicron variant. And we are getting some news on the vaccine front right now.
Yeah, absolutely. We are hearing from BioNTech saying that they are starting developing a new adapted COVID-19 vaccine. This is, of course, in relation to the Omicron variant. They're also saying that they are assuming that a variant vaccine might be needed. That is the wording we're getting there. And Matt, this comes after Moderna, of course. We're seeing shares there in pre-market rising, as Kailey was pointing out earlier, because of the fact that Moderna has said that they see a fast new vaccine being possible. The dangerous new variant could evade current shots. So there seems to be a view from the vaccine producers that a new vaccine is going to be needed, even though we don't have all those facts just yet.
It does seem like, everybody's already saying that they will have a new vaccine variant in a couple of months. At least Pfizer is saying it's going to take them probably about 100 days to develop a new vaccine. The question is, how dangerous is this new variant, right? We know, or at least we can see that it spreads fairly quickly. The question is it more fatal, or is it maybe even more mild, as we're hearing from scientists in South Africa?
Absolutely. So let's get a perspective on that. Sunetra Gupta, University of Oxford Professor of Theoretical Epidemiology, joins us. Professor, really good to speak to you. I know we're still searching around for a lot of facts when it comes to the Omicron variant. We've heard a bit more from South Africa just this morning, and obviously we heard over the weekend. How much weight do you attach to these testimonies from doctors in South Africa that suggest maybe symptoms are mild? Or do you think that's just because perhaps the age profile of those infected is young? Do you have much to go on when it comes to how severe disease is created by this new variant?
We always had a lot to go on when it came to how severe any coronavirus variant might be, and particularly the age profile of risk in terms of severity. So first of all, of course, I attach a lot of importance to the testimonials of people on the ground. They are the people who were there watching this unfold. So, without any there is no doubt there that I would completely accept what they're saying. And at the end of the day, the proof is in the pudding, which is who is being killed by this virus and how frequently. What we need to remember when it comes to virulence, how bad it is that it depends not just on the intrinsic properties of that variant, but how much immunity there is in the population against severe disease. And at the moment, we have a population where there's a lot of natural exposure and a lot of vaccine exposure, or who've been vaccinated. And so I think we should be very, very confident that whatever its intrinsic properties are, we are in a very good place.
OK, Professor, that's interesting, because you're then making the assumption that immunity gained through vaccination against the original form of COVID-19, or immunity gained through infection, yes, through having got the disease, or perhaps both. You're assuming then that will stand you in good stead against this new variant. Is that correct? And how do we know?
Well, we know that from other coronaviruses. This virus has behaved exactly as we'd expect if we look at how other coronaviruses how we live with other coronaviruses, and indeed with many other infectious disease agents. your first infection confers a very high degree of protection against severe symptoms and death. And that's what we really want to prevent. And so this new variant is arriving in a landscape of humans who have already experienced this virus, either through natural infection or through vaccination, on top of which most of us are actually not even that much at risk of severe disease and death. So we're talking about what we should always have been doing is focusing on the vulnerable population, and the vulnerable population have either been vaccinated or suffered natural infection. So they should have good clinical immunity. What we don't have and will never have is permanent immunity to infection. And we have to accept that. But that is not a bad thing. Infection merely tops up herd immunity and possibly also immunity against severe disease and death.
Isn't the most vulnerable population, those people who, especially older people who refuse to be vaccinated?
Yes, of course. And that's why we should be we should be directing our efforts at making sure those who are vulnerable and unvaccinated become vaccinated. That's what we should be doing, not putting masks on children.
What I really want to know is about this, how this is going to spread, because in the U.S. there's some question about whether the Omicron virus is there. But if we know for a fact that 60 people came in by plane to the Netherlands, a relatively small country from South Africa, and were positive with Omicron, can't we assume that hundreds of people in the U.S. already have this variant?
Absolutely, and we should have, as we should have at the start, in March 2020, one of the things many of us were saying is that obviously this virus has already come and it's already spread, given the characteristics of this virus. It's already spread. So Omicron, or whatever you want to call it, is now, it may have already spread. We wouldn't know, and that's the good news. That's the good part of it. So we wouldn't know because it's not killing people.
As far as the policy response, then, are travel curbs too little too late and therefore not appropriate?
Travel curbs are not appropriate under any circumstances. I mean, if it is true that travel curbs stop the spread of infection, which as we've just said, is very unlikely given that it's spreading invisibly, then those travel curbs should be agreed between nations. To unilaterally impose an irrational travel curb on nations, particularly ones which depend on the travel industry for the livelihoods and lives of people, is just unethical.
We only have about 30 seconds left, but if that's not the right policy response, what is appropriate given what we know now?
As you've just said, let's look at who is vulnerable and as yet unvaccinated, and also doesn't have natural immunity. And let's make sure that they're protected. Let's protect the vulnerable. That's what we always should have done.
Professor, thank you very much. Thanks for joining us. Professor Sunetra Gupta, University of Oxford Professor of Theoretical Epidemiology. Thank you very much for joining us. Later today, we'll continue to get perspectives on the fight against the Omicron variant of the virus. Then Joshua Sharfstein from Johns Hopkins Bloomberg School of Public Health, Vice Dean. He will be joining us 6:30 a.m. in New York, 11:30 a.m. in London. Coming up on this programme, more on the market response to Omicron with Charlotte Ryland, CCLA co-head of investments. We'll get further details on this rebound. What should the strategy be over the next couple of weeks as we wait to hear about lab tests of existing vaccines against this variant, and how should we play our end-of-year strategy? More on that next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz. Matt in Berlin, Kailey in New York, of course. And Matt, here in Europe, we see European equity markets rebounding. We also see oil prices rebounding. I mean, a 4.5% move would be a big deal on any other day. But given they dropped, 12, 13% on Friday, maybe not quite so much.
Yes, I would say here in Europe, right? Because, of course, you're in the UK and you've chosen to separate yourselves. I had to come back into the heart of the pandemic. I was in safe and sound America for the last few weeks, and then my beloved Ohio State Buckeyes lost a horrendous game of football against a team from up north, and I decided, that's it. I'm flying back. I don't care if the pandemic is worse in the heart of Europe. I would rather not be in the Midwest anymore. So, yeah, good to be back.
Good. Well, we're very glad in Europe, as I am geographically still, to have you back, Matt. Kailey, what are you seeing on these markets as we head towards? This is a long-running argument that Matt and I have about the UK and its geography. Kailey, what are you seeing on US futures then as we head towards the start of trade? It looks as if we'll get a similar rebound to what we're seeing here in Europe.
Yeah, but the rebound is not going as far as to make up for Friday's losses, which were the worst for the S&P 500 going all the way back to February of this year. Of course, it is still a positive session on the day in both Europe and when it comes to U.S. futures. But again, the gains are really quite small relative to the losses we saw to end last week. Right now, the Stock 600 up less than 1%, about 0.9%, and S&P 500 futures up by about 0.8%. You also are seeing the start of a reversal in the bond market. Of course, the 10-year yield came in 16 basis points on the 10-year Treasury on Friday. This morning, we creep back up about 6 basis points. Right now, we're sitting at 153.63 on the 10-year. And as you both were just discussing, a rebound taking shape for crude as well. 13% loss for WTI to end the week last week. We start this week up about 4.5%. Right now, WTI trading at $71.25 a barrel. And of course, with that move in oil, we are seeing a subsequent move in energy-related stocks in pre-market trading. The likes of Marathon and Occidental Petroleum up more than 3% each. And then you also are seeing a rebound taking shape in the travel complex, including for the cruise lines, Norwegian and Royal Caribbean, up about 3.5% and 3% respectively, Anna.
OK, let's get a perspective on these markets, on this rebound. Charlotte Ryland, co-head of investments at CCLA Investment Management, joins us. Charlotte, good morning to you. When we look at European equity markets rebounding a fraction of their losses from Friday, does that make sense to you, Charlotte? Do we just hover here for a couple of weeks as we gather more evidence, even if it's just lab-based studies around Omicron, and we get more real-life data, I suppose, from South Africa on what it's doing to hospitalizations? Is that what lies in store?
Yeah, I mean, I think there's, going to be a huge amount of uncertainty while we wait to see whether this is just another mutation of the virus and that actually vaccines and the treatments that we have in place are going to be able to cope with it. I mean, if the news flow turns out worse and therefore we get a much more draconian response from governments, and clearly that's going to be very negative for markets. But I think our core assumption is that actually we can continue on the strategy we have been going on in terms of reopening, and that, we won't need to take something more drastic action, at least in the US and potentially in the UK as well.
And what would it be that would change that for you, Charlotte? I mean, maybe that's right, and maybe that's the view that you stick with into the year end. But what would it take to change that view? Would it be something around the effectiveness of vaccines or further evidence of higher hospitalisation in South Africa? What would change that view?
Yeah, I think it has to be, it's not just that there are cases, but that there are evidence that it is something that we can't cope with in terms of, there's hospitalisations and death rates, and perhaps it being much more virulent amongst younger parts of the population. I mean, that would be, where you would get, very severe concerns. But I don't think that is the base case from what we've seen so far. We know vaccines mutate, so, that is something we're probably going to have to cope with, is that we'll continue to have these sort of rolling changes within COVID, and it's not something that we're going to be able to very quickly eliminate, and it is something that the economies are going to have to learn to live with.
Do you worry about a hit to earnings? I mean, I noticed today, for example, Louis Vuitton Moet Hennessy is back up, and I assume, although I'm not sure if I'm correct, that the reason is investors were freaked out on Friday about lockdowns, about travel curbs, and that hits luxury purchases. And now they're saying, okay, it's not going to be as bad as maybe we thought. Do you worry about hits to earnings around the world?
Well, yeah, of course we do. But I mean, in terms of the luxury names, actually the travel part of that business hasn't really recovered. Certainly the Chinese are not going back out to Europe in the way that they used to, and shopping. That hasn't come back. But they are, of course, shopping at home, and particularly shopping online. And that's been one of the things that's really supported people like LVMH's earnings and produced, really very strong earnings growth into this year, even without travel coming back. And of course, with the US again. A very strong wealth effect coming through in the US, that has been translating into luxury purchases there as well.
In terms of sectors, Charlotte, what do you think is the safest bet right now? Where can investors kind of hedge?
Yeah, I mean, I think we're very much keeping the emphasis on quality businesses, and you can find that, across a number of sectors. So, I mean, within technology, some of the software companies, the Microsofts of this world, we still think look pretty compelling. There's clearly quite a lot of froth in some parts of the tech sector, Nvidia's, Tesla's, etc. So we've been somewhat cautious where valuations got very extended, but I think you still can find some sort of high margin businesses which aren't vulnerable to some of the inflationary pressures that we've got going on, some of the longer term growth trends still intact for those businesses. I mean, the traditional safe havens are things like, the staples of this world. So, it'd be a Pepsi or a Nestle or something where people carry on spending on those kind of basic goods regardless of what's going on in the economy.
For tech, of course, they are particularly vulnerable to the threat of higher yields. But do you need yields to stay low for risk assets broadly to continue to do well, Charlotte?
I think it depends on what you think is coming through on the other side in terms of the earnings growth. So, I mean, where we still can have confidence in that coming through, I think that can be supportive. But I think you just need to be very cautious where you've got very extended valuations or where you've got business models where actually, it's much more about the hope and it's not really about the actual cash flows coming through. So I think that, there are certainly areas of bubbles within markets that investors need to be very cautious of. But, I think there's equally, some very solid compounding names within technology that are still compelling for the long term.
Charlotte, thank you very much. Charlotte Ryland, co-head of investments at CCLA Investment Management. Thank you for updating us on your thinking around these markets as we deal with the uncertainty and everything we do not know about the Omicron variant. Coming up on this program, it's the world's first NFT for ballet. We will speak with world-famous ballerina Natalia Osipova about the NFT that she is launching. That's next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later on today, Pfizer CEO Albert Bourla. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in Berlin and Kailey Leinz in New York. Now, non-fungible tokens, or NFTs, have exploded in popularity this year with the help of collectors, speculators and celebrities stirring up hype and funding for them. And now ballet NFTs are taking centre stage. World-famous ballerina Natalia Osipova, principal dancer at the Royal Ballet in London, and her choreographer partner, Jason Kittelberger, are auctioning off the world's first ballet NFTs at Bonhams in London from today. Natalia Osipova joins us now. Natalia, really nice to have you on our programme. And I wonder, let's start with the simple question of why you've decided to launch an NFT. What do you hope to achieve?
Okay, hello. I think, it's first reason because pandemic actually almost killed art. We don't have live show 2 years. We don't know what it's do. We sit just home, creation video for Instagram. And I think with my partner, what next? What we can to do? And actually, my friend, we're talking about NFT and we think that it's amazing opportunity creation, really high level art, that's and have independency.
And what actually will be owned, Natalia? Is it the specific performance? Is it the choreography?
No, this is like triptych. It's like 3 short video. 2, it's classical ballet and Giselle. It's 1, it's most beautiful classical ballet, romantic. We creation, we do it recording 2 weeks ago. It's just like black and white video. It's really beautiful. I dance live, special for NFT. And 3rd video, it's contemporary dance. We creation with my partner, Jason Kittelberger. This is contemporary dance. It's more physical expression, more body, more power. That's this one, yeah.
I have to say, although I'm an unlikely, I guess, ballet fan, I grew up reading Laban Notation in New York, and I attended the ballet a lot when I lived in London. How has it come back in terms of having a public in terms of people watching live since the end of lockdowns?
Mm-hmm. That's amazing, you know, that's really amazing feeling, because we come back on stage just 6 months ago. 2 years we sit home. It's to be actually really hard, because dancer lose shape. Dancer always need to be physicality working to be on stage. I know I'm like cry, honest, because it's to be so touching. You understand who you are, you artist, you place for stage. I'm cry, and everybody's so exciting. That's art come back on stage now.
Natalia, have you and your colleagues found other ways to work with technology? I mean, we're talking right now about your NFT, but have you been performing more online? Have you got, have you opened some more conversations with your public online? Has ballet and has the arts changed a lot during the pandemic?
You know, I think that's what we try to do, creation new platform for art, especially for dance, because, you know, dance always to be a little bit behind. Now we want it to be like progressive and to be there. And I think it's like great opportunity, you know, for communication maybe with visual artists, dance, musical together, and like exactly creation, exactly like high level place for art.
Perhaps a lot of the work that's been done by arts organisations to connect with the public through the lockdown, Natalia, perhaps that opens up the audience, as Matt was saying, and perhaps the NFT opens up to new audiences, attracts attention from new audiences. When we speak to NFT creators, they're often men, and we've written at Bloomberg about how a lot of the NFT market is dominated by male creators. Have you experienced that, Natalia? Do you feel you're outnumbered, or has that not gone through your mind?
No, my mind, you know, I'm always to be dancer, always. You know, it's like dance culture and ballet culture. It's always to be more for women. Of course, I won't take as beauty, as physicality, as talent, give for world.
Okay, thanks so much for joining us, Natalia Osipova, Principal at the Royal Ballet. Thank you very much for being with us. And Matt, another twist and turn, I suppose, in the NFT story. We've been talking about art NFTs for a long time. You know, the sort of the paintings and the digitally created, yes, exactly, digitally created images. And now we're talking about ballet as an NFT. I suppose it just extends your mind into new areas.
Yeah, well, you know, over the weekend I was reading a lot about Quentin Tarantino, who has sold off, I guess, pieces or maybe the entire script of Pulp Fiction as an NFT, and now the studio is suing him, claiming that he doesn't have the rights to publish the script in that way. Of course, he retained publishing rights, but they're saying an NFT is something different than publishing it in paper form or online. I'm not sure how you differentiate. That'll all have to be decided by the courts. But the whole crypto world took a beating, especially Bitcoin, in the sell-off on Friday. It's interesting to see it turn into a risk asset the same way others are, rather than a hedge.
Yeah, really interesting to think about whether real-world ownership how that extends into the NFT space, into the metaverse in the future, and absolutely on the moves we're seeing now. I mean, Bitcoin up by 1.6% after, and it didn't initially sell off all that much during the fear on Friday, but it soon caught up with that fear trade, and it was part of it. Now, coming up on programming, Studio 1.0, Emily Chang will be speaking to the Alphabet CEO Sundar Pichai about his next big moonshot, tech regulation and the future of that metaverse. That is at 5:30 p.m. in New York and 10:30 p.m. London time. This is Bloomberg.
I think it's time for change in policy at the Fed. And I was of the view that this may be easier with someone who hasn't repeated over and over again that inflation is transitory, don't worry about it, it's going away. Inflation is not transitory. And it's really important for the Fed to realize this.
Allianz Chief Economic Advisor, as well as Bloomberg opinion columnist Mohamed El-Erian, they're urging the Fed to acknowledge that inflation is not transitory. Joining us now is Matt Winkler, Bloomberg Editor-in-Chief Emeritus. He just published a new column on how inflation bonds are betting on team transitory. And Matt, really a lot of this is in the definition, right? I think of, your career with words, creating Bloomberg style. What do you think of the word transitory? It can be seen in so many different ways.
Well, of course it can. And if we really want to get at the essence of where inflation is, one really good place to look at, and something that all of us should do as journalists and commentators, is what does the market say? And what is the market, speaking of words? It's a collection of investors. And what is the collection of investors saying right now? It's saying inflation will peak in the next 2 years, and we will be back to trend over the next 30.
So what is trend, and where is the market telling us inflation is going to go?
Okay. It's showing us that, because we can look at something called Treasury Inflation Protection Securities, TIPS, created at the end of the 90s precisely for this sort of problem, if you like, where inflation is suddenly surging, and you can be protected from that surge. And the TIPS are showing us that inflation, based on their valuation right now, that we're going to see CPI surge in the next 2 years, but then it's going to decelerate. And if you look at that over the next 2 or 3 decades, it really looks very similar to where we've been over the past 2 decades. And in fact, some people are making an argument that the bull market in bonds isn't even dead yet, that we're likely to see more of it. And by the way, people who aren't even looking at the market per se are saying something similar. Whether it's Cathie Wood, who, as you know, is constantly referring to innovation as essentially deflationary. So the market right now, the Treasury bond market, is saying that inflation does not get anywhere near where it was in the 1970s.
Okay.
There's no such thing as runaway inflation in the bond market.
Okay, good morning to you, Matt. I mean, when we look at tips, though, and look at those clues, as you rightly suggest we can, as to what the market is pricing in, does that tell us? Does it really tell us about the future, or does it just tell us that investors are listening to the Fed's forward guidance and pricing that in? Is it just a market that just sees the world the way the Fed does?
It's actually very much about the future, because the bond market is about expectations and what you're going to return or see in a return over the next 2 years, over the next 5 years, over the next 10 years, out to 30 years. We can see all that in the bond market. So it's all about expectations. It's not the rear view mirror. And in fact, you could say so much of the commentary right now is the rear view mirror, because it's about what has happened yesterday with prices and inflation.
And thinking about something that is sort of ahead of us, not really in the rearview mirror, I suppose, though, Matt, would be the complications from the Omicron variant. I mean, your thoughts on what that does to the inflation debate, because you can see the weight it applied to energy prices during Friday's session. That clearly points in the direction of deflation. But then on the other side, we know that supply chain disruptions have been driven by the pandemic. Which side of that do you fall down on?
Well, as Friday's market told you, even inflation that is such a certainty is quite volatile. In other words, people thought inflation was accelerating, and suddenly on Friday oil prices collapsed. And that just shows you how fickle trading can be, particularly when no one really knows what's going to come in the weeks, months, and dare I say years ahead. What we do know is that the market is saying that the trend that we've experienced in the 21st century, which is disinflation mostly to deflation, is likely to continue.
And an incredible bond rally. I mean, in your column, which our viewers and listeners can access by typing OPIN GO on the terminal, you quote Gary Shilling, who basically started the job of a chief economist at a bank, I believe at Mother Merrill like 50 years ago. He expects the bull market in bonds to continue running, and that we could even see 1% on the 10-year by the end of the year.
That's absolutely true. And he looks at everything the way a macroeconomist would. He looks at global trends, all kinds of trends, and from his analysis, he says that, for one thing, the fact that we are all getting older, the fact that we are, as a developed economy, likely to experience more disinflation, means that the bond market is going to respond to that. And, there's a lot more to it than I've just said, but that's essentially his analysis. And that is, in fact, borne out by the price action of the bond market, whether you're looking at 2 years or 10-year treasuries or even 30 years. And for example, if you look at the benchmark 10-year right now, it's at least 70 basis points less than the last time unemployment declined to 4.6%. So if we were really scared about inflation as investors, why is the yield so much lower today than it was the last time, 2017, when employment declined to 4.6%?
Matt, thank you very much for joining us. Matt Winkler, Bloomberg Editor-in-Chief Emeritus. Thanks so much for spending time with us here on Bloomberg TV. Just wanted to mention, Matt Miller, the lines we're getting from Scotland. Nicola Sturgeon, who the Scottish leader there, saying that, well, she's calling on the UK's Johnson to tighten travel restrictions further, says the Scottish Omicron cases may be community transfer. So just adding to our knowledge, I suppose, is about how far this has got in Europe.
Well, stating, in a sense, stating the obvious, right? This is going to spread. And then with a little bit of a populist comment saying they need to tighten travel restrictions. The question is, does that really help?
Yeah, absolutely. More Bloomberg surveillance is ahead. This is Bloomberg.